Hey traders, what's up? Jamie Saettele here. It is May 19th, 2016, and good afternoon, everybody. And apologize in advance if I am coughing or anything like that. Get something going on here with the throat, allergies or something, I don't know, but that time of year. Anyway, want to start off by looking at the Kiwi. I've described it as kind of a slow motion train wreck. And because, the market's down, but it's not, it's not like plunging or anything. So what I'm going to do, literally, it feels like last year. It's probably not because markets don't typically repeat themselves exactly, right? But it feels like it, and the dates are lining up. I put up a chart last week talking about the similarities with the financial stability report, right, in New Zealand. It comes out, and it comes out a couple times a year, I think, but it might be a quarterly report. But it rallied. That was this year. That was the financial stability report right here this year. Last year it was here, much bigger rally, and it failed at the 20-day average. Okay, last year, and we had the 20-day average was a little closer to 69. It obviously failed before then, and here we are pressing, the recent lows. But the interesting part again is the double top that you had in 2015, April 17th and April 29th. This year, April 19th and May 2nd. Okay, you then had a low on May 12th. Okay, and here we had a low on May 10th, financial stability report, pressing the lows last year on May 20th and broke below, and here we are today is May 19th. Okay, so it's all seeming to still kind of fit. Stops have been raised at this point to above 68, which is yesterday's pre-FOMC level. So if the market takes that out, I won't be in this trade. But if we continue on this path like we did last year, what we would get is basically a little break and then a retest of former resistance, which is actually where we are kind of right now, 67.60. It even kind of similar right there, right? This was early April lows at 67.60 last year. The early April low was 73.91, and you broke on May 20th and then retested resistance, former support, on May 21st, 22nd. So, still kind of watching this as a template, I guess, for if this were to play out, and to add to a position, you'd kind of want to see the market take out these lows and then maybe get a retest of 67.60 yet again. Okay, some point probably Monday. At least that's as far, it's how this lines up. So that's what we're looking at. And again, I got the slopes on here. You can see the requisite pitchforks, Andrew's lines with this, and they actually quite similar. They almost the exact same slope, right? Last year was a little steeper. Not a surprise. Like the decline was extremely steep, but you can see how well it held it for so long. So anyway, full form of IMO. IMO is in my opinion. That means in my opinion, right? So it's just easier to say that. And plus, Twitter doesn't have a whole lot of space to write, in my opinion, right? So when I say in my opinion, I guess it's a given. Everything's going to be in my opinion, I guess, right? But it's just easier to say that, whatever. kind of a habit, I guess. So there's Kiwi, and still very, very interested in, obviously in this trade, but interested in maybe really stepping on the gas if the next few days play out like I just described, with a little breakdown and a little rebound, because again, you've got some pretty big downside, on this chart, talking about, the weekly chart. It really is quite bearish in my opinion still, right? I mean, resistance, really the support, on this chart is not until the channel support, which is also, as noted last night, you've got weekly and daily reversal support there, which is from that August 24th crash day in 2015, which is also the August 28th close that week. So you've got that at 64, 54, 78, right? And, that's some 300 points lower, whereas risk on this really is not, we're talking like not even 100 points at this point. So still a very good reward to risk proposition on the short side here for Kiwi, and still do very much like it on the downside. All right, let's switch gears real quick, take it to US dollar. So more or less at resistance, did not hit this one. Okay, this is the line that extends from the April 2015 and September 2015 highs, and it wasn't all that precise at a lot of its points, but generally speaking, the area around it was pretty good as far as providing support, and resistance, right? So, excuse me. So you would go through, this level, and then it'd be a fake out. Yeah, you guys can all hear, right? Someone said, Steve's saying, is there supposed to be sound? Testing. Can everyone hear? Test. Test. Testing, testing. Can you guys hear me? Please let me know if you can hear me. Can you guys hear me? All right. What the hell? All right. Test. 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 All right, traders, what's going on? Can you guys hear me now? I've literally been speaking for 10 minutes, apparently to nobody. Okay. All right. Well then, so let's go through this again. Wow. I guess I don't know what happened there. All right. So let's start over. So I just went through Kiwi dollar for a good 10 minutes to myself, and I guess I'll go through it again to everyone else. So, and excuse me, by the way, if I am sound terrible. I had some sort of throat allergies problem, whatever. I've been coughing, so sorry if I start coughing in the middle of this webinar. Alrighty, so moving and I'm now speaking to everyone that can hear me rather than just myself. All right, so I want to start with Kiwi. A question here before. IMO, someone had asked, means in my opinion. Permendra asked that. It means in my opinion. So it's just easy to say IMO instead of in my opinion. Although I guess everything is given that it's in my opinion, right? So let's get started with Kiwi. Had talked about, put up a chart last week going through the similarities to 2015, right? And we have, just to quickly go over, last year, double top with April 17th and April 28th, okay? Made a April 23rd low, broke that, okay? And then had a temporary low on May 12th. Okay, this year, double top, similar dates, May 19th, April 19th and May 2nd. Temporary low on the 10th. You got a rally on the financial stability report, although it's a much larger rally. Strong decline. It broke the low on May 20th. Well, this is May 19th. So we're at that time where we're looking for us to break the lows of this right here. And then if we do, you could end up getting actually another rebound into 67.60, which is the early April low. Last year, the early April low was 73.91. We broke on the 20th, rebounded into that on May 22nd, which obviously would be on Sunday. And then the market pretty much fell apart for a while. So if we continue on this path with, with Kiwi, okay, then probably be adding to this position over the next few days, okay. And then, looking at, there's still plenty of downside risk here. Even with the stops above at 68.55, I'm moving back to 68.55. I put them at 68.10, but that was more of an intraday thing. So the market didn't rip, and we've held down here. So even with 68.55 stops, you've got, risk of weakness really all the way down to 64.50, 64.80, which is weekly reversal support. And this is a good time to go through that concept. Weekly reversal support is the close of the low week, which is 64.54, and obviously the close of the low day. So, from the August crash, 64.78. So virtually the same levels. And that gets you down here towards the end of the month. So really a good deal of downside still for the Kiwi compared to upside potential, by looking at this chart. So that's just a quick rundown on Kiwi. Taking a look at the US dollar index, we have come into this resistance level. It's funny, for all the craziness that's gone on with the dollar, yet with the Fed minutes and everything yesterday, it's really not that changed, is it? I mean, the index isn't really all that changed. It's kind of offset by euros down, Aussies down, although not that much. Pounds, up, and dollar yen hasn't done really all that much either. Dollar yen's up, but not big time. So, we're at resistance. Again, resistance is, from where we were. I was looking more like 11,980. So here, these lines from the April and September trend line from 2015, which did cross through a lot of price action. Not really all that precise once you get past these lows, but generally speaking, still a pretty good reference point as far as providing a bullish or bearish deal going on with the U.S. dollar in general, right? So we have that. as far, maybe some headwinds and a bearish candle going in here. So with that said, I think it's pound dollar is the best spot to be, in my opinion, on the long side. I mean, I just think pound's going to rip face. Like, it's already ripped face, but I think it's going a lot higher. Whether or not you get a pullback from here or not, or whether this is the pullback, ideally you look for a three-wave decline, A, B, C, maybe a little more, maybe one more test, and maybe a test of 45.60 potentially for cable before it, really takes off on the upside into the third wave. But cable's headed a lot higher. We've been following these setups for some time for pound. 143 didn't get it, but the upside risk is significant. And again, 48, 49, 48.50 basically is where, excuse me, sorry, it's very difficult for me to talk right now with these allergies. 48.50 is where we'd be looking for initial resistance, but given the sentiment on pound, the head and shoulders that took place, the retest, the response at the retest, I mean, cable just might be about to go absolutely ballistic through the roof. Okay, so best spots to play dollar weakness, in my opinion, is British pounds for the foreseeable future. And, lots of stuff has been written about the pound, from our end over here. I mean, the seasonals have turned up on every single time frame except 5 year. 5 years actually not for another couple of weeks, but across every other time frame, 10, 15, 20, 30 year. 30 year actually is in a couple of weeks too, but you do have very strong upside for cable. And then on the monthly, you can see June's one of the better months of the year across all time frames, 5, 10, 15, 20, and 30. All right, pound's very bullish moving forward for June. I know that it's still May, but just saying, looking ahead a little bit. So yeah, do like pound very much on the upside. Maybe pound's kind of showing the way, for dollar weakness, if you will. Ideally you get kind of, this is an A, B, maybe get a little drop before it go higher. I think a simple way to put it is that pound dollar is buy on dips, right? Until further notice. That's the way I think you should look at it. Let's move to Euro real quick. This was the Euro chart I put up last week. Short-term chart. I still think that you can get 1150 or so, 1130, 1150. This is the short-term chart, and I mean, don't have a whole lot of stuff right here. 1150 would be better as far as a low is concerned. It's kind of the same thing with the U.S. dollar, right? Like, we got the U.S. dollar coming into resistance, coming off, looks kind of bearish right here. At the same time, you get, the Friday high phenomenon, right? I always say it's a good habit, but never buy a Friday high, right? It basically means don't chase a Friday price extreme. So if the market's going higher, okay, and it makes a new high on a Friday, this is like for FX, okay, and because usually FX is not like in some sort of crazy trend. But a lot of times you'll get, people are fading that move the whole week, and then they're like, screw it, you get a little, they put their stop above Thursday's high, and then market goes out, takes them out, and then reverses, and everyone freaks out. But Same thing on a low, right? Never sell a Friday low. Same same idea. It doesn't mean don't be bearish on a Friday low. Like this, like last week, this was last Friday right here, right? And we had, euro. I put the order to sell euro at 13.30, which was right here. Obviously, market came in during Europe, sold off again, so I went to break even, and then, inexplicably the market runs the stops and heads lower anyway. But the idea, you get that Friday fade on the other side of the market. So if the market's ripping, you get a Friday fade down, and then buy that. Or if it's tanking, you get a Friday fade up, and then sell that. So it's kind of a habit, I guess, or a guideline to follow. So wondering basically if you get, or the setup would be to get that Friday high to sell dollars right into here. So if you get a little pickup higher in the dollar overnight and into resistance, then you want to sell this thing. Okay, and that would mean specifically buy the British pound and probably the Aussie dollar too. So at least that's my, story that I've told myself in my head. That's what I'm looking at. So yeah, I do want to be bearish dollars up here and bullish pounds. As it pertains to euro, you might be able to get about, this is the euro chart, the daily chart. And why is this red line at 111.46? It's because of this close right here. Okay, that's 311. That's the day after ECB. It's a high volume day. High volume week, I should say. And I'll show you there right here. So here's the futures chart. And you can see OBV, on balance volumes, as support actually. Okay. Actually, the close for this on futures actually hit that level already. So if we are at support. Either way, the best thing to do here, in my opinion, with euro and dollar in general, is if you do get that final low, Friday price extreme, then look to buy it. Look to buy a euro. That would be. So again, you've got a lot of confluence going on with euro right at 11:30 to 11:50, and it all clusters starting around the European Open and into the US session. So, this is a very steep downtrend, short-term downtrend, but you've also got this pitchfork Andrews line. And I do give this one some validity because the median line pretty much held up as support, right? Before the breakdown happened 2 weeks ago. So yeah, that's what I'd be looking at. Kind of a buying into 11:30, 11:50 for euro and recovery. Where's the recovery? I don't really know at this point, but would just be looking for a decent bounce at that point. Bigger picture, we've really got, I think, things are really set up well for euro to get really bullish on a longer term basis. Remember the charts here, right? On the weekly. I mean, this is it, man. This is it. This is the weekly chart. And this is it. This was written on May 7th, but looking to the drop into 110.70, then we can start preparing for the breakout. Interim support seen at 114 near 113. So we're below both those actually. But 110.70 really is the big area, right? And it's not a Well, any wonder why? I mean, 110.60, 110.70, you got lows and highs going back to January of 2015, right? So there's a ton of stuff. You got 55-week average, 200-day average, you name it. And, next week, I guess, would be ideal to get there as far as lining up with the fork is concerned. So there's Euro. The notes that I had written basically was 111.50 for a fade, for a buy, and then 110.60.70 for the big time buy. Let's see, Aussie. Matthew asking, line in the sand, change your opinion that Euro's headed towards parity. What do you mean? I don't think that Euro's going to parity, actually. Are you saying you do think Euro's going to parity? I think Euro's going to go a lot higher. Oh, what would change my mind? I guess. I mean, I don't. It's the thing. You don't need to change your mind. Like, if you get it wrong, you get it wrong. Like, it's not a big, whatever. It's a trade. Put it this way: if the market crashes through 110.60, which is this support line, and I wouldn't want to be long, but that also doesn't mean it's going to parity, though. It just means it could go down here to like 106 and rally. Don't forget, everybody, we have here this is a super long-term chart, right? 1985 low, 2000 low, 2015 low, 15 years apart, 15 years apart. The dollar's going into its next great bear market, okay? At least that's what I think. And that means it's not going to parity. At least I don't think so. We have a huge support line here. I mean, this chart really does tell a pretty good story, and you've got major support, okay? And you've bounced off of it with authority several times. Okay, first in March of 2015, then it says November, it was actually December, it was the ECB of 2015. So that was what, 9 months apart. So even if this breaks 110, again, you can see it here. Here's the 55-week average right here, right? Same spot. So even if you were to break that, it doesn't mean that I say it's going to parity. That just means that you probably do nothing for a while and wait for it to get to support, which might very well be, again, at 108.80. Remember, we opened the year at 108.70 something. So, yeah, whenever I'm making a trade in euro, I have this in the back of my head. I think that the market could go a lot higher because you're at huge support. It's like when you were trading back here at 160 in 2008. And I remember this. I was trading back then. It was, 8 years ago. And a bunch of people were like, man, euro's going to it's at 160, right? And everyone's like, it's going to go to 165, and then it's going to crash. Well, then it's just crashed instead. And it made a double top and crashed, right? Well, now everyone's like, yeah, euro's going to go to parity, and then it'll rally. Or it's just going to rally, right? So, not saying I'm right or wrong, but I think the trade is higher. At least that's the setup for me, is to look for support at 110, 50, 60, 70, whatever. You've got a lot of stuff there, including trend lines on a weekly, daily chart, whatever, off the lows from here. And then if it does fail there, doesn't mean that the market's going to crash to parity. It just means that you broke some support, and the next support might be actually not that much lower, which is like 108.80 or so. So that's what I got going on there. All right. All right, so that's euro. I spent a lot of time there on euro, but let's look at, we already did pound. Aussie dollar. Aussie, I like Aussie higher from here starting now. We've got, I don't know if you get to the lower parallel or not on this. I mean, I'm sure you do at some point. And you might actually, you know, again, the longer term picture, Aussie could end up going to 63 cents. Remember a couple posts ago, a couple weeks ago, actually. I believe it was on the 8th. Yeah, here it is. So the Barron's magazine cover, the Aussie buck, right? Australian dollar's remarkable rebound should continue. Signal that worldwide and commodity prices has room to run. Well, since then, Aussie's gone pretty much straight down, as have commodities. But, and this is Barron's, like, this is their MO. All right. They're actually right. Like, if you read the article, they're right. I have the article right here on my desk. They are right about a lot of things in here. But the timing's usually pretty bad. So, you know, looking at that made me wonder, Aussie, maybe it tanks into July, which is like near 63 on this long-term trend line. And then bottoms. And July would be the best spot for it to happen, just because you've had some really big turns in July before. And this was the chart at the time, back on May 8th, and it really is the same thing. So it'd be looking for support down here, right? We've gotten here 72.80s, looking up towards 74.90, 75. So the trade here is higher, I think, right? Now I don't know if you get up to 75 in the next 3 days, that would be a little stupid. So I don't know if that's going to happen at this point, but I do think the trade's higher here. At least the reward to risk is higher. Coming into this level, you know, holding the fib on a closed basis, that's nice, I guess. 61.8. Again, 71.20.30 is the lower parallel. This is an impulse, so, you know, 1, 2, 3, 4, 5, 6, 7, 8, 9, which is 5 waves down. Okay. You can see it here, 1, 2, 1, 2, 3, 4, 5, 4, 5. All right. So you do have an impulse on the downside. And for argument's sake, let's see where you would get 75 is 50%, lines up with the lows. So that's cool. I would be expecting to see you know, resistance somewhere probably on the parallel, maybe on this parallel, but somewhere, you know, median line. I wouldn't worry about that right now. But I like the long side on Aussie. Again, it's the same deal I just said with euro and with the US dollar, generally speaking, is today a low, or do you get the low tomorrow, right? You get the turn tomorrow. You get the Friday high in dollar, and then you sell it. Or do you just, you know, bite the bullet and take a long here? You know, it's up to trading style, I guess. I personally am long some Aussie right now. I have some long Aussie. And if it goes down just here, 71.30, I'd probably buy more, to be honest, right? But basically looking for the market to rebound here, Australian dollar to rebound. And let's see what I actually want to see what the seasonals actually do turn up this week. 15-year, every year except for 5 years. It's like pound, right? You can see the seasonals turn up pretty good. And the seasonals have been useful. I mean, they turned down in right when we topped, right? And looking higher now. So going into a seasonally bullish period for Aussie, I think it's time to be bullish the Australian dollar and the British pound specifically against the dollar. Those are the two best ones to be bullish. So, one to play dollar resistance, then do it with Aussie and pound. Again, I'm sorry I sound so terrible. What else? Dollar CAD. So here's what I'm playing. Here's the parallels. So there's really not much to work with, like on this. I mean, it's like vertical. So not a whole lot to work with. I still think there's upside potential in dollar CAD to at least 138 at some point. But the initial place and where I think you probably could actually see trouble at this point might actually be up here. Okay, I did the fibs. I'm going to scroll out a little bit. You can see the fibs from January high to the low here in May. You do have the 38.2 is 133.11. Okay, very close to the former fourth wave, which is 32.96. And I think you have a quality of waves measurement at that point too. So in other words, where the rally from here would equal the rally off of the low. And you do, it's 33.25. So there's a lot of stuff up around 33, to 33.20. So I would expect to see some sort of a pullback in dollar CAD from that point. Question is, right now we're at 131 and that's 200 points away. So where do you want to buy it? Well, I still think the best place to get long is about 29.85 or so. But, if it doesn't get into there, watch for support on this line, which is obviously much higher. It's like 30.60 or so. All right. You can see what this is just a trend line here. Okay. And then you're extending the trend line, from former peak, basically making a channel. Okay. And, that was, kind of indicated support last night. This was during Europe. And then this one's interesting to follow. It's like an internal slope line. Okay. And you would get good intersection there. If we were able to come in, basically over the next day or so into 2090. So I still like that level as far as a long's concerned. Here's another kind of way to look at it. I talked about this with pound yen last night. This is a 4-hour chart. And the average is a 30 period average. And that, these averages are for a reason. On the intraday charts, like on a daily chart, fine, 200 day, whatever. And even sometimes on an hourly, just because for whatever it works. I don't know why, it just does. But yeah, but I love 30 period average on a 4-hour chart because it's 5 days. Okay, it's a rolling 5-day average. And in really strong trends, like not even this, right? Like this part was strong, but like, this whole trend here, like on the upside, which was last June, you can see that the market basically, every time the market dips into or around that 5-day average, right, that kind of gives you the signal that, okay, go for it. And here's another thing, don't worry about, with dollar CAD, don't worry so much about, well, one, you never want to chase. Okay, it's just a bad idea. But with let's see, I think this is it, yeah. Remember the analog, right? So here we are right here. We're actually following the June 2009 rally pretty close, much closer than the 2007 rally. So not a surprise. So this actually suggests that you could get a decent pullback, okay? And that the big rally really doesn't start until next week anyway, as far as the next big up day, right? So this has been, it's been fairly useful. I mean, up, down, up, maybe a day, 2, 3 of pause, or 2 days of pause, and then look for that move higher. So take this into consideration too. So still think there's dollar CAD upside, and again, probably until at least before you get something that would, at least where you might actually want to short, 3,300, 3,325, and then would be looking, but looking to take longs into that area, right? So support, former highs, 2980, ideal, okay, 33, 3320 resistance. So that's dollar CAD. Dollar yen. I'm wondering if dollar yen's made like a major low. Okay. Or at least a low that we're going to head back up to like 115, 116 at some point. If you look at dollar yen short-term chart, we actually didn't get to 110.55 yet. Again, dollar story, same thing here. You could get the Friday high in the dollar, then you would actually want to be selling it, so you could get a dollar yen opportunity to do that here too. Or dollar yen, I should say, could do that too. Here's the count we had. Right? 1, 2, 3, running triangle, 5, got the rip, had the orders at the week open 2 nights ago at 108.63. To me, this market bottomed like nowhere's land. 108.71. I mean, couldn't get another 8 pips on the downside to trigger us long, and then take it higher. Whatever. Anyway, you can count 5 waves up from the low now. Again, it would rather sound like I say it's tone blue in the face. I'd rather sell a Friday high into resistance. And again, resistance is still higher. It's 110.60s, okay, or a little higher than that. You got the slope line, which is like closer to 110.80. All right, so 110.60s, 110.80s, that would be an area, as far as I'm concerned, where you could get a pause or a change in the in the trend, okay, like where you could get a setback at that point. And that's really the only thing I'd focus on, I guess, at this point, as far as dollar yen's concerned. And if you do get a dip in dollar yen in the meantime, like overnight, like if we pull back, into 109, I'd still watch support on this, right? That's one thing that wave counts can actually screw with you, like with your trading, because you'll say like, well, I see 5 waves up, therefore the market's going to go back to this level, former fourth, it's going to go back to 108, 108.20, and then it's going to go higher. Well, what happens a lot of times, the market just pulls back to support and then goes higher. And then you're like, oh, now we have an extended wave or whatever, right? That's great, but you're not in the trade. So what you want to watch for is just support. And it looks like it's, if you get support during Asia, right here is like 109.15, a little higher, 109.38, although that would not be till next week as far as the intersection. And so with that, watch the Nikkei. This trend line, we've been following this for a bit. Remember, it was all the way back here on May 6th, where we were looking for a low down here. We ended up getting a low before we were looking for a low, but the ensuing rally went right back to the median line, which is where we were looking for it to go anyway. And you do have pretty good looking number of supports, parallels here. Okay, so you have this parallel, and tonight it looks to be, or I should say the next day or so, it looks to be, you know, a little lower. 16,374, currently 16,545, so not quite 200 points the downside, about 180 Nikkei points lower, and we all know the Nikkei can move that in like 5 minutes. So I would pay attention to the Nikkei level here too. Okay, for dollar yen or yen crosses, yen anything. And let's see, how's that fit with the S&P 500? Let's see here. I showed an S&P chart earlier today on Twitter. S&P bottom before support, didn't it? We had 2021 as support. It bottomed right before then, came right back. If you get there, I still think you could get there. If you get there, then watch for support. You do have a head and shoulders going on here. Haven't had a daily close finish it yet. And quite frankly, you know, it does seem like everyone's kind of bearish, doesn't it? And usually the market doesn't go down so well when everyone's bearish. It usually does stuff like this. But yeah, I'd still look lower to this 2021 area and then get, you know, who knows, maybe another big rip to the top of the channel. Just follow the channel lines. It's kind of that simple with this stuff right now. Right? It continues to work. Resistance up here, support down here. I mean, it's a big channel, right? You get 30, 40 points on each side. So continue to play it until it breaks. This doesn't get really bearish, by the way, until you break down here below this support. You break down there, and then the market comes back to test as resistance. That's like the sweet trade that everyone, that's like what you live for, right? So if you come, you know, like this, you break down, and then you get there, and then you go lower, right? This is the sweet spot everyone's looking for, right there, okay? You want to see the market break a support that's down sloping, retest it, and then that is the entry that everyone's looking for. And you could say the same thing on the upside for, like right now, for dollar CAD. I'd watch this dollar CAD chart, right? Watch this level. You know, it's resistance, this short term, but you can see it was resistance, okay? 15-minute chart, excuse me. There you go. So this is like 30-60. And you can take trades off that stuff all day. I mean, market comes in and bounces, right? So just draw that on your chart, this trend line here, and trend line, channel line, and watch for the market to come into this area, okay? You know, it could be tonight, it could be tomorrow. I mean, you know, I'm just saying. Sarah, are there any CAD data tomorrow? There is actually. You have CAD CPI tomorrow, so that could get interesting as well. I'm not sure. I don't have any insight on anything fundamental because it's just not my thing. I never found it useful for trading. CAD CPI. I don't know. We'll see. You know, with the, I don't know if the crude oil rebound or anything will have anything to do with that or help that out or whatever. But I'd be, if there was a pop towards CAD strength, if dollar CAD fell on that, I'd be looking to fade it. If you know, especially if it was at one of these supports. All right, CAD. Okay, dollar CAD, dollar yen. Down through that, dollar yen. Dollar yen. You know, I just for the next couple days, really just honestly draw 110.66 to 110.80. Okay, that's I'd be a seller there. But I'd also look at if you get a move tonight down into 109, 15 or so, I'd actually be a buyer there, right? So like here, I don't really do anything, but if you come into 109, and this brings me to pound yen. We do Nikkei, pound yen, dollar yen, all that stuff, right? So we love pound higher. It's going to rip. Just, not sure if we get one more leg lower as a correction, just a small one. If you do, and you get the dollar yen move, you're going to get 159 in pound yen tonight. So if that happens, then, this is the chart from last night, same chart. 159. Pound dollar's a buy on dips, and pound yen is too, especially if you get 159 tonight, which I don't think is that crazy of an idea. I mean, pound yen can really move, as we've seen. It went from 160, 160 back, down to 150 pips. It went down in just, a couple hours today. So, you can get another 150 pip move lower from here would actually put you pretty close to 159. So, dip and then more rip up into this region, 163s, before you get any sort of pause again. And eventually this goes up to the 174 area. Some other interesting non-dollar crosses, actually. Pound CAD is an interesting one, as it should be. If I'm bullish both dollar CAD and pound dollar, wouldn't it be bullish pound CAD? Yes. So same thing here. Here's that channel, right? Former resistance, right? Resistance broke out. So this now becomes support, okay? Or if it's hit. And you might have some resistance up here around, you've already come back to the wedge. This is the wedge breakout, actually. You've already come back to the wedge, which is 190, 160. 193, this region right here, you might get some resistance up here, okay? This might be a good one to put in the update later, right? You might get some resistance up here around 193 for pound CAD. But this is definitely a buy on dips as well. So pound CAD and pound yen actually kind of similar as far as strategically thinking. So yeah, look. So I'd put that support, was that like 189 or so, a little above 189 for pound CAD. Gold. Tabor asking thoughts on pound volatility as we get. I mean, I'm not sure what you mean by thoughts on the volatility. It's one reason why I love the trade so much, because everyone keeps talking about Brexit, and it's presented a high, reward to risk opportunity on the upside from a very clear pattern. I mean, act like you didn't know anything in the news and just look at the pattern on the British pound, right? It's beautiful. I mean, you've got resistance provided, support. Okay, we were looking at 143 to get long, but whatever, we get the right idea, get long. You have a bullish fork going on, head and shoulders, retest, all this, just tons of good stuff going on here for the British pound on the upside. It's really quite bullish, the way it's acting, right? So maybe we could, I guess, if you asked about volatility, there's probably a lot of shorts in there at bad prices. You could probably get some extreme upside movements. You're going to have volatility both ways, I'm assuming, but you could probably get some extreme rallies, okay, on this unwinding, okay, if that's what happens. Okay, I want to take a look at gold real quickly. Always an important market to have a handle on when you're trading FX. and just continue to follow this slope. It's beautiful, isn't it? It's absolutely beautiful. We've been going between these lines now for some time. And I would, the big support, I talked about 1240. Well, we're getting close. 1240. Today's low is 1243 and change. This line, the sliding parallel that goes down here off the lows on 215 to 328 and 41, I'd be watching that probably for better support, which is closer to 1232. Okay. So, just we talked about this. I wrote about it last week or early this week, I'm not sure, but talked about how former resistance had become resistance again after you broke below. Behavior change became resistance. A little fake out early in the week, came back below, and here we are getting close to support. So, gold's really trading well technically between these levels. It is still an uptrend, and eventually this thing's going to go to the moon, but in the meantime, these levels are providing pretty solid inflection points. Silver, similar deal, actually coming into support now from the short-term bearish median line. I do think this does break eventually, and that you get down to the bigger support, which is, closer to 15.6 on silver. And finally, I want to leave you, I think, is Hossein here? We had talked about Hossein. Remember a couple, I see you here. We had talked, remember a couple weeks ago, we had, during one of these webinars, we had talked about dollar rand and pound rand. And I said, you asked me to look at pound rand. I had never looked at pound rand in my life. I said pound dollar I like higher, and dollar rand I like higher. So maybe I like pound rand higher. Anyway, let's look at that. That thing's gone through the roof. Yeah, and this was the chart we had. This was it. We had this chart at the time we did this webinar. And dollar rand looks the exact same. It's not a surprise because, well, they, are going to look the same because one's super volatile, the rand part of it. Okay. Anyway, so here's dollar rand, but watch this as we move into the summer, okay? Because, look, I do think that you have a dollar top in place up here. All right, that's my working assumption. And you know what? There's going to be a huge opportunity to sell, or I should say to buy the South African rand. Okay, it's like a full-blown crisis in this currency, and there's going to be a great time to buy it. And that time to buy it, I think, might be around 1675 or so. You know that the 618 retracement of the decline is 1673, and the close of that week, which is again weekly reversal resistance, is 1675.75. So that area up here is going to be super interesting as far as potential resistance is concerned. Okay, so just keep that in mind. Again, this is not something that's going to happen tomorrow, or probably not even in the next month, but maybe later this summer. And we'll keep your eyes on the news wires and see if it's full-blown panic in the EMs again. Okay. All right. So I'm going to leave it there. Good stuff. Dollar, the big theme here for tomorrow going to Friday, the Friday high thing, right? If you get the Friday high in the dollar, look to buy euro down to 11.30, 11.50, maybe sell dollar yen at 10.66, 10.80. Pound dollar is my favorite position on the long side against the dollar. And if you finish that, a little three-wave correction here, right? A little A, B, C would be ideal. Try to have more details on it coming up in the update later. I like Aussie dollar trying to bottom down here where we are. Kiwi I still think has downside potential. Dollar CAD, pay attention. As you come into 130.60 for support, probably can get a bounce there. If you come in there, the big buy I think is closer to 129.80, 130, and it's going to 133 before it stops and pauses for a little bit. Okay? So thank you everyone for attending. Let me get this archived and up on the website, and we'll have an update out later. Again, apologize for all the coughing and sounding like I sound. Just kind of going through allergies here right now, and we'll get over it. But yeah, so everyone take care. Have a great rest of your week. Okay? All right, bye.